and we're still tracking the move lower. The US dollar moved sharply lower overnight, which sent most other markets higher, and we'll look at that because, as that's the catalyst for most of the moves today. However, the move up through here is more corrective in its price action than impulsive, so we need to allow that to play out. However, in the bigger picture, this particular move that we're looking through at here is a larger corrective pattern that we expect to come down further and then another move higher above here. So we just need to be mindful that corrective patterns are the weakest link in Elliott, and we need to be mindful that that they can just simply double in size, or they can take a different path and so forth. So that's where the trading levels comes in and helps us out somewhat, because in this particular case with the Dow Jones here, the 15,300, if that regains support there, then we would have to view this here as an A and a B and a C wave moving down through here. But even as a C wave, that doesn't count very well either, because it's just not a C wave. It's normally in 5 waves and it's not complete. So I suppose it could be complete if we moved the wave 2 to here, which is also viable as well, and we'll be looking at that in a moment. So the other point here is that this move down through here had a lot of volume in it, and this move that's coming up here is a corrective rally, doesn't have a lot of volume in it. So that's another thing that supports it being a corrective rally. The other point too is that the 200 here, the 15.2, is the pivot within group 1 here, and normally when that becomes the resistance, especially the second time around, then the market gets fixed to the closest largest number, which is down through here. So yeah, look, everything's still bearish, even though things have rallied a little bit higher, and we wouldn't turn bullish unless the 15.3 here became the support there. So just viewing this here for a moment here, this is this the 1 hour chart for the Dow Jones, and just a couple of things here. We were looking at the 15,350 here as being pretty much the balance point within this correction through here, and eventually it became lower from that point there. However, we're also working with the 15.3 now, and I just mentioned then that this rally could be, this market could be counted a little bit differently, and this is how that would count. So we had a little wave 2 to here in terms of an A and a B and a C, but this one down here, even on the cash market, doesn't count very well as an impulse wave. It's more like it's in 3 waves here. So it's quite possible that this is an A, B and C here for the A wave, an A, B and C for the B wave, and you can see this here, if you pulled it apart, counts quite nicely as a C wave. So it's quite plausible that this move down from wave 2 here is down for wave 1, an A and a B and a C for wave 2, a flat correction, and then having this down as wave 1 here, and the 61.8 retracement level comes in around the 15,280 there. So the 15,272 would be important, the 272, and also the obviously the 280, and well, of course the 15.3 there. So there is a series of resistance there, and as I mentioned before, if the market can lock under 15.2 here after it's tested higher above here, then we know that we're on the way to the downside. But we've just got to be mindful that, you know, when you take the major turning points here, this is a 3-wave swing here, and we need to be a bit mindful of that being corrective. But as I say, this particular move down here counts in 3 waves from this point here. So it's just not complete. It's not finished just yet. So yeah, looking at this a little bit closer through here, I can see on the cash market, the futures can be a little bit tricky at time, and then the CFDs laid on that as well makes it a bit tricky. But on the cash market, if you have a look here on an intraday chart, it does appear to be a corrective 3-wave swing within this initial part here. So we could take this as an A and a B and a C rally coming back up to the 61.8 retracement level, which, as I mentioned, would be at the 15,272, 1580 through here. So a little test higher through here, especially if the midpoint here, the 50, develops some support on there. And as I mentioned as well, there's more volume to the downside here and less volume to the upside here. So it does support this testing higher through here. And this is the same for the S&P 500. But with the S&P 500, very simply put, the 1650 here is the line in the sand. If the market found that as support, then we need to count this as an A and a B and a C, and that's done and dusted, and we'll be seeing new highs above here. We're viewing this as a wave 3 high here and a corrective move down through here. The corrective move down through here can take us down to, well, if it's just a short ABC correction, then it can take us down to the 1600. But if it's what we think it is, then it'll take us down to the 1535 down here somewhere. So a fair way to go if that's going to be the case. The other point in question here is the obviously the 1600 is a large number, but the 10, 20 and 30, they're all part of group 1 here, and we've had our first sort of landing within top of group 1 there, so there's always going to be a bounce from that point. The point is that will the 16.2 here, 20, become the resistance through that? If that's the case, then we can look at the 1600. And if we're looking at the 1600, then we also need to look at group 2 here as well, the 1580 and the 1572, because that's what locking under the pivot within group 1 will create. So we can look at that lower through there. So bottom line is that no matter what the wave count is that long as it's under the 1650 here, then it's bearish. If it sits on there, then it's bullish from that point there. And I'm harping on about that because of the sharp move down in the US dollar, which we'll look at in a moment. The Australian market wave count is a little bit tricky to understand too, but just coming back through here from this high up through here, we're counting this as down for wave 1 here, back for wave 2, and we've been looking at wave 3 developing all the way through to here, and the wave 4 to here. When we get to this countdown here, it's got overlapping wave structures. We're counting yesterday, we could see the 5 waves in this little wave structure here, which would be really the wave 3. But even wave 1 here doesn't count very well as an impulse wave, I have to say. But we have to run with that wave 1 from here, because from wave 4 to wave 5 there should be 5 waves. So when you're looking at this, you'd go 1, 2, 3, 4 and 5, so to speak, because they're all the main turning points. However, wave 4 overlaps wave 1 here, if that's going to be the case, then this has to be an ending diagonal triangle through here. The other reason this too is that the volume down through here yesterday, even though the market was lower, the market down through here was on lower volume. So it'll be interesting to see if we get higher volume today. Maybe you can just have a look at that for a second. Where are we? XJO here. So just bringing that up into here, just a little bit easier to see, that's all. So we can see this is the third wave in here, coming down through here. So this was like the 1 and the 2. The third wave in here, the fourth we're looking for here, and the fifth into here. But as I mentioned, the fifth doesn't count very well. We had strong selling on this bar here with that volume there, so the sellers were predominant there. But this move down through here was on lower volume than the previous day. So it's a fact of things drying up. So there's, with the trend, there's the beginning, there's the middle, and there's the end. So there is a bit of an ending situation here, but it'll be interesting today to see. Yes, we will be rallying today, but it will be interesting to see how much volume actually comes into the market as well. The manufacturing figures in US overnight, they were a bit poorer than expected. So yeah, anyway, let's see. The other thing today too is the cash rate on the RBA cash rate coming in at 230, and we got the Australian dollar rallying there. So it's either buy the rumor, sell the fact, or dictating no change there. But look, anyway, after 5 waves, we get a 3-wave counter trend. Okay, that's what we'll be looking at, and then we'll be looking at another 5 down through here to finish that corrective pattern. The banks are in pretty much the same boat as well. With one of the things with the banks is that we were unsure how far, and if the US markets are really going to roll over at that stage, then would we get an extension in this move coming down through here, which is always on the case? We talked about CBA and pegging the low in for CBA on its 5 waves down through here. That may be correct. But when I look at sort of Westpac, it seems there is possible room for extension to the downside. So just a bit of a rock and a hard place there that we need to work ourselves through. So Tuesday's also a bit of a profit-taking day as well. So that's what I'm considering today will be with its rally. And it'll be interesting to see if Wednesday close gives us a new low in the markets. If that's the case, then the trend is continuing to the downside and we'll see a rally on the Thursday, but then the Friday and the Monday will be lower as well. So just bear that in mind. Okay, let's have a look at, if you're trading this long here today, then you need the 48.72 as support through there, and it'll be a retest of the 49 through there, and look for 5 waves up through here. You can see that that's the third wave unfolding in here because it's the strongest, so there'll be a series of 1s and 2s in here. The third here is probably not quite finished, so you should get up there a little bit sort of higher, but look for support on the 48.72 and 48.80. If you get support on 48.80, then you can add to that and maybe just trade to the 48.90 and take some money at that point there. Let's have a look at commodities. Okay, just starting with the US dollar through here, we're expecting a 61.8 retracement level, which has occurred from this trend up through here, coming back into the 61.8. So basically 82.50 area through here. But it's just the fact that what bothers us is the move down through here is actually really quite swift, which is normally you wouldn't see that in a C wave ending. So basically an A wave, a B wave, and a C wave down through here. It just wouldn't. It just wouldn't sort of finish like that. This is more if we look at a trend channel through here, and this breakout through this trend channel here as more of a baseline through here. It's normally this has sort of got the personality of a wave 3 breaking out of a base channel here and building a stronger move to the downside. So technically, the wave 2 can come all the way down to the bottom part of wave 1 here, but obviously that's quite some way away. In looking at this through here as well, I can see that we can still expect if this is a little wave 1 in here, wave 2 to here, wave 3, wave 4, we can still expect to move down through here into 82.20, 82.30 before that finishes and moves to the upside here. And we'll look at this more in the commodity section, in the Forex section. But this sharp action here does, it's more of a third wave breaking out of a base channel rather than an A and a B and a C here. So this is a little bit sort of alarming for us. So that means that the euro to the upside and the gold and so forth to the upside will be stronger. So just in starting this here, this is the copper market here, and as you know, first of all, we've got the 330 here, the top of group 1, and while the market has got if it's got this as tested resistance, then our bias is bearish. But now that once again, it's got this as tested support. That's testing here. It'll be tested once we get a break higher through here. But it has tested and it is supported. So it does really come back to that wave count that we've had. Like yesterday, we were looking that if we get a break down through here below the 325 here, then we would have a bearish move on our hand because we would have this down as 1, back for 2, 5 waves down here for wave 1, back for 2 here, and a third wave moving down. But that's not the case. With this moving up through here, it really keeps this A, B, and C move in through here. So that means that that materials will be moving to the upside, and the count that we've got with BHP would be pretty well sort of right. So when we have a look at BHP in the US to start with, we're looking at this in terms of an A and a B and a C wave up through here. So it is finding support on this medium level through here. as such, and that means that the Australian BHP as well is we were looking, sort of looking for a deeper pullback, and that's why we were shorting it from here yesterday. I knew that it would gap, but I knew that we'd also be taking this low out through here, and that could still be the case. It will be interesting today to see that if the volume we get today is only slightly, if the price action doesn't take, if the price can move up, but if it's on lower volume than this move down through here, then we'll know that it's still part of a C wave moving down through here as well until we get completed here. But in terms of the pattern, we're looking for 1, 2, 3, 4, 5, and then we get an A and a B and a C through to here, and then we'll get further upside through here. This little B wave here is definitely in 3 waves, as you can see, the little A, B, and C here. So we should at least come down to this level here, if not break down through this part here, because that is corrective there. So, but let's just see how we go. But seeing copper move up through here certainly gives the delivers a positive market for base metals, and also gold as well. So with the gold as well is that we can see that we've had, from this previous high here, we've had a little 5-wave structure to the downside, and we're still running with that as well. We'd stay with that until that high there at 1422 was taken out through here, and we'd be looking at this as an A and a B and a C. And this, if the US dollar does find support and the US indices roll over to the downside with the wave count that we have, then we'll see this move to the downside as well. So in looking at this little structure to the upside here as an A and a B and a C here, this C wave here, it should be in 5 waves, and it may not be completed just yet. So this is just drilling into it here on the 5-minute chart here. So we're looking for, from the low of the ABC, we're 1, 2, 3, 4, 5 for the A wave, 3 waves for the B wave, and if we're looking for 5 waves for the C wave, we'd be looking for 1, 2, 3, 4 here, and 5 up through to here somewhere. The 5th wave here, if we took this 3rd wave, doesn't seem to be the extended wave here. Wave 1 seems to be a tad longer, so that means that wave 3 can't be the smallest in the sequence, unless it's an ending diagonal triangle, but we have these in 5 waves and not 3, so we can't call it an ending diagonal triangle like we can in the lower move for the ASX 200. So that means that from wave 4 here to the move up through to here, we could take the length of wave 3 here and take the 61.8% of that, and that should bring us into the 1418 area through here, which would still keep us lower than the 1422. But a move above the 1422 there, then you know that we're going to be seeing further upside for gold. And also seeing that volume come in yesterday for most of the gold stocks as well, gives it that, certainly gives it that upside possibility. Not so much for NCM, because NCM, we can see that it's got, if we have a look at NCM, for instance, bear with me for a second while I get it up. This move through here it still appears to be corrective. It's a little bit of a move like this here, so we could see this rally somewhat higher through here, and by all means, I mean, this move yesterday up through here was on lower volume as well, but yeah, it just reminds me of a more of a corrective pattern that will create further downside, and yes, it can take the high out from here and go to 1600, where it's got the resistance through here, just as that move here took that one out there. So be a little bit sort of careful with that when we're looking at stocks like KCN that been moving down a bit further. We can see a better picture forming here, because we can see more volume coming in through here now. But once again, we just need, if you're going to trade this long in stocks, you really need to have like $2 as the support there, because we also need to see a strong 5-wave structure to the upside, in terms of 5 waves up like this, and then 3 waves back as such like this, and then finding support on that $2 area through there with another climb to the upside there. So there's still, it needs that tested support there. So it's still in the process of this setting up for development. There's still a fair way to go through here. So just be a little bit mindful of that if you're chasing gold to the upside. Right. And oil as well. So oil, we were looking for 5 waves down in terms of the 1, 2, 3, 4, and still looking for it to come down to this area through here. It made a new low, so we've got to call it the 5th wave in here. The most important thing now is the 93 is at the top of group 1 here. So it's likely to see, if we do get 5 waves through here, which is a reasonable possibility, then we would see a corrective pattern unfold through here. So perhaps a retest back through to here, and then we would need to see a move back up through here, and then would need to see support on the 93 here as such. And if that's the case, then we would be looking to take that high out through here in terms of a trade, so to speak, through here. This is also going to depend on, of course, the US indices as well, because their wave count is further to the downside as such. So we just need to be, just need to be a bit mindful there. We'll know in a session or two where we stand with the US indices. Let's have a look at the FX. Okay, just revisiting the US dollar here, and look, as I mentioned, we were looking for a 61.8 retracement level from this 5-wave structure to the upside, and you can see that that's around the 82.50 area here as such. The wave structure for the downside here, this quick move down through here would indicate that there is further to go through here. The other side to this as well, as I mentioned, that if we're looking for a C wave here, we're looking for a more sort of lazy move down through here, not so fast through here. So this breaking of this this previous low through here was quite swift, and that's normally the expectations of a 3rd wave unfolding to the downside. So it is a bit of a concern. So as I mentioned, technically this low through here, the 81.37 on the actual index itself, would be the breakout point for that. But I think we can lift it up a little bit towards the 82 here, because this little area through here, is the next support. So as I've sort of pointed out before, that when a market's coming down, it will pull down to where the volume is sitting, and in this case, and the number, of course. So they go hand in hand. So you get support here, but if it breaks support here, then it simply drops down to the next support here, and normally at the top here there will be support there, and then deeper support in the middle of this scenario here. So it does appear that on the intraday that we could look at this from this little high here down to here as wave 1, wave 2, and wave 3, wave 4, and wave 5 there. So when we have a closer look at that in here, we can see that this is how it counts here, the 1 here, the 2 here, the 3 here. The 4 would be unfolding through here once it's complete, further to the downside through here. But if it doesn't find support here, as such here, and move up from this point here, then we're going to see the euro even move higher. But in the meantime, just for the short term, this little move down through here that's expected would be what we'd be looking for on the euro to the upside. Now with the euro to the upside, this is a daily chart here. We're looking at this being the A wave, the B wave, and the C wave here for wave 2, and then we're looking for this to be wave 1 to the downside, an A and a B and a C for wave 2 here, the 61.8 retracement levels at the 131 here, but the A, B and C here has still got further to go to the upside. It could actually go to 131.50 here as such. So let's just have a closer look at that here. So, yep. This is how we've got it counted here, such though the wave 1 here, the A, the B, and the C wave here, and the C wave in 5 waves, the 1, the 2, the 3, the 4. It pulls a little bit further back through here, but we need to line this up with the with the US dollar as well. So we're looking at this little structure to the upside here at the 131. If we drill into that a little bit further, we can see that very much like gold's pattern here as well. We're looking at gold on the 5-minute chart, and this is the same thing here as well. So if we were looking at this as being wave 1 up here and wave 2 to here and wave 3 up to here, then we need to consider this wave 4 pulling back 38.2%, and then we would be looking at wave 5 to the upside, which would roughly be, in this case, same as wave 1 here, roughly. So we'd be looking somewhere up in this area here for that structure to complete up through there. I do need to point out though that, you know, the market being above the 130 here, which is the top of minor group 1, but just simply being above that puts a bias spin on the larger structure. So just bear that in mind as well. But let's allow this to play out. Let's allow the US dollar to play out further, and let's see where we go from that point there. The Australian dollar, as you know, will have the RBA rate announcement today at 2:30, so we can see that pushing up for that. So that's either buy the rumour, sell the fact, or rates left unchanged as such. But what we can do is we can look at this structure moving to the upside through here in 5 waves. So we can take that strong wave there as the third wave. So we can look at this as a series of 1s and 2s here. So we can expect wave 4s to go across the 98 here and to the wave 4 of 1 lesser degree through here. So looking for a top anywhere from, you know, the 98.30 really to the 98.50 sort of area through here to complete that 5-wave structure to the upside, and you can see it a little bit clearer here as being the third wave through here. So if you're trading this here, then you would look for 97.72 as support. If you've got that support there, then you can trade long from that point there and sell, you know, at just before 2:30 anyway. Right, okay, so that's it. So we've got the euro, Australian dollar, and commodities all in sync together to the upside, or even the Dow Jones and the S&P 500, but we're looking at those moves there as corrective rallies, and the continuation moves of the euro to the upside and gold and commodities to the upside will depend on the US dollar, finding support between 82.30 and 82, which will take another session to unfold. So we can expect some sort of zigzaggy sort of patterns through the Wednesday and the Thursday, and we'll look for the stronger trend on the Friday and the Monday. Alrighty, thank you for listening.